Hey guys, what's up? It's Frank here from Altcoin Buzz. Good morning, good afternoon, or good evening, wherever in the world you find yourself. So today we're going to go over 3 trading tips to protect you in this volatile market. I will start off by explaining what a limit order is, as well as a stop limit order. Next, I will show you how to create a long position here on the MEXC Global Exchange. I will show you how you can create your risk to reward so that you can plan out your trade. And finally, I will explain the concept of Confluence, which is a very important principle in trading, which will help you make a decision about when to enter a trade. Now, for those of you who don't know, Altcoin Buzz is first and foremost a crypto investment research company, and we have been providing you numerous 100x returns since 2017. So if you want to get in on that action, join our Altcoin Buzz Access group, where we document up-to-date research covering undervalued altcoin gems, NFT minting opportunities, and our portfolio strategies. Also, don't forget that we have this special Altcoin Buzz campaign, only 7 days left now, $6,699 worth in total of giveaways. Those include a $99 Altcoin Buzz Access Pro membership, $4,100 worth of bonuses by depositing and trading on the MEXC Global platform, a $2,500 lucky draw giveaway, again simply by depositing and trading. And remember, just 7 days left on this promotion. So click the link up above or down in the pinned comment section down below to take part in the action now. Also, please don't forget to like, subscribe, and click the notification bell so that you don't miss any future updates. And finally, please note that none of this is financial advice. Okay, so first of all, I'm going to explain what a limit order is. I currently have 0.005 BTC on the exchange. Let's say I want to sell this Bitcoin, but I want to sell it at a price of $20,600. So I would enter that price here, and to the amount of Bitcoin that I want to sell, maybe I only want to sell 50% of it, so I can use this handy slider here on the MEXC Global Exchange, whereby I want to sell 50%. This will be a total of $51.5. I click sell Bitcoin, and note that nothing will happen because the price is not currently at $20,600. Instead, you will see the open order down here. You have the price at which I want to sell it at, the total in USDC at which it will be sold, and also, of course, the total amount of Bitcoin, which I want to sell at that price. Okay, so next thing I'll explain is the stop limit. Let's say you've bought Bitcoin at the current price, but when looking at the chart, you see that the previous 4-hour low is at the $19,836 level, and you're afraid that if it drops below that, that we will lose the 4-hour uptrend, and therefore you want to minimize your losses. So therefore, you would go to stop limit here. You would have your trigger price set at 19,799, just to give you a little bit of leeway in case there's a wick. And then you would enter your price that you would actually sell it at, something close to $19,000, let's say 19,500. Now, what this means is that if the price falls below $19,799, your Bitcoin will immediately be sold. However, it will not be sold at a price below $19,500. Now, usually you don't really need to worry so much about this price, especially in liquid markets like Bitcoin. Even if this price was $18,000, for example, it doesn't mean that your Bitcoin would be sold at a price of $18,000. It just means that as long as the price is between the trigger price and this price, your Bitcoin will immediately be sold at the best market rate. So again, here, let's say, for example, I only want to sell half of my Bitcoin if we lose the 4-hour uptrend. In this case, I could create this order where I use this slider, just 50%, sell Bitcoin. Again, nothing will happen if I click this because this is a stop limit. It's based on the condition that if the price is less than or equal to $17,799, my Bitcoin will be sold at a price no lower than $18,000. And as I mentioned, what would most likely happen in this scenario is that your Bitcoin would be sold at a price of about $19,790, let's say, because maybe there's other stop limits which are there before you. You get a slightly worse price, but of course on a reputable exchange like MEXC Global, where there's decent volume, you will get your trade executed at a good price. Okay, so the next concept that I will explain to you is the concept of confluence. So confluence basically means that you have not one, but at least two reasons to enter the trade. At least two reasons why buying at a specific level is likely to generate a positive return. Now for this example, let's actually go to Bitcoin USDT. Here on the MEXC Global Exchange, you have the option to trade Bitcoin in multiple ways, by the way. You have a 3x long here, 10x BTC USDT perpetuals, and of course, just the standard BTUSD. Okay, so one way to explain confluence is, let's say that you were watching this Bitcoin action play out here about a week ago, and you saw that there was an important support level for Bitcoin, which was approximately the $28,350 level. So one reason for shorting this would be waiting for a close, a candle close below this level. So this 4-hour candle close would have closed below this level. Now that is one reason for entering this trade. So now you wouldn't actually have confluence that this is a trade to enter. So that's when you might go and look at the RSI. And if we look at the RSI on the 12th of June here, we saw that the RSI reached oversold. Now, usually when the RSI first reaches oversold, this is actually a sign of weakness. It's a sign of a shift in momentum. So here you would have had what we call confluence. A, we have a break of the previous market structure with this 4-hour candle, and B, we have an entry into the oversold area, which is again a further sign of weakness. So that would be your confluence for entering this trade. Okay, so finally I'm going to explain to you the trade setup, the risk to reward setup. So let's say, for example, you want to enter a Bitcoin long at the current price of $20,300 approximately, and you want to minimize your losses. So in other words, you're betting that we have already reached the all-time low, that Bitcoin will not go below $17,589. But if it does, you don't want to be holding your Bitcoin position. So you would have a stop loss potentially at exactly this level, this $17,589 level. And here you can see that your risk here would be 13.43%. That's how much you could potentially lose. Now, it's important to also look at your reward. And as we previously established, this was an important support level in the past, this $20,830 level. So you could reasonably target this level with your trade. And this would give you potentially up to 40% return on your investment. But of course, because you have potentially a 13% risk, your risk to reward ratio here is 2.9. So to simplify this, let's just assume that it's a 3-to-1 risk to reward. Just to explain to you this principle, if it's a 3-to-1 risk to reward here, what happens is that if you lose this trade once, let's say you enter $100 into this trade. If you lose this trade once, you will lose $13. But if you were to enter this trade and exit at a profit at this target, you would win $40, right? So this 3-to-1 risk to reward means that you can afford to lose on this trade 3 out of 4 times, and you will still be profitable as long as at least 25% of the time you are correct with this trade. In other words, you can be wrong 75% of the time with this trade and you will still be profitable. So that is the idea of the risk to reward ratio. A 3-to-1 means that you have to be profitable at least 25% of the time to be profitable in this trade. All right, guys, that's been it from me for today, but don't forget that we have just 7 days left on this exclusive Altcoin Buzz promotion. I told you about all the bonuses that you can get on this page. In the link in the comment section, you can see exactly how you can do this. It's just a matter of opening the exchange account, funding the account within 7 days, start trading and following the terms and conditions. And of course, guys, if you enjoyed this video, if you appreciated the way I explain things, the way I present about cryptocurrency, technical analysis, all that good stuff, then check out these other videos that I've made for the Altcoin Buzz channel as well. And guys, with that being said, I'll see you in the next one.